George DeSantis here with a look at the market for the weekend in June 24th, 2016. Let me put up a disclaimer here and then we'll get along with the charts themselves. So a simple disclaimer that trading and investing has large potential rewards and large potential risks, like we saw last week. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice. As usual, we'll start with a monthly chart of the S&P 500. Nothing changed much here except that we closed near the end of the bar for this month. So, and that of course is attributed to Friday's very bearish activity after we got hit by a brick, so to speak. So we still have parabolic below the most recent bar. We still have MACD trending up a little, was trending up and just took a bit of a tick down here. So the trend is still up according to the MESA indicator. Kalman filter is above the instantaneous trend line. I think we should move on to the weekly chart. All right, so here's the weekly chart of the S&P 500 that we usually look at. The first thing that I like to look at is the relationship between this Kalman filter, the yellow line here, and the instantaneous trend line, which is the blue line. As long as the Kalman filter is above it, this indicator is telling us the trend is up. However, we do see that weakness as a result of the especially Friday's price action that brought this bar all the way down. Also, we find that the parabolic, that yellow dot, is now within the body of last week's bar. So we say that last week's bar hit the parabolic. Typically, what would happen is that the parabolic would then shift above the next bar, and it would signal a reversal of the uptrend that we've been in. That is not a given. Of course, we could actually see a very nice move again next week to take us back up, all to be determined, of course. Below here, we see that RSI 12 crossed just slightly below the 50% line. Not too good, not good at all. 50% is, I think, is a good threshold, sorry, so that when it's above the 50% line, I want to be holding the S&P, and when it's below it, I'm not anxious to hold it. I should be selling it. Now MACD is trending down, and it's just slightly above, the histogram is just slightly above 0, so it's 1.69, but the trend is down on this, and we could see further lows on this. Percentile crossed below the 80% line. What it says is that momentum has fallen off here, of course, for this uptrend that we were in. So the momentum is now weaker. There isn't much momentum to this uptrend again. However, it's still holding above the 50% line, so we'll see how that develops. Let's take a look at the daily chart. On the daily chart of the S&P 500, this is an interesting looking chart. All last week, before this Friday's bar, we had some nice action here. In fact, it looked as though, well, we had a squeeze of the Bollinger Bands. See, they were very narrow space between them here. And I even sent you an email saying it looks like we might break to the upside, and that was on Thursday, Wednesday or Thursday. But then all hell broke loose on Friday when we got hit by the brick. So now we have a situation where the Kalman filter was approaching the instantaneous trend line. It just slightly went above it on Thursday, and now it's back down below it. So technically, the trend is down on the daily chart. There's no doubt about that. The parabolic is hit by this current bar, so we don't know what direction that's going to take. It could go below it. It could continue to remain above it. So the trend is down here, and we have to wait to see what develops there. Now, the other thing I want to note here is that the Bollinger Bands are 2 standard deviations above and below the, let's say, a 20-day average, okay? In this case, it's about a 20-day. Well, the probability of this these bars remaining below 2 standard deviations is very low. Okay, there's a very low probability of that continuing to happen. So one might say, well, yes, this market is very oversold, and it is. We'll take a look at some other charts later on and see that that's the case when we look at the best choice charts. Okay, so it's oversold, but they could remain oversold in a downtrend. There's no reason why it can't remain oversold in a downtrend. Now, Jerry Appel, some of the rate of change indicator just broke below the 4% line once more. So that's suggesting that this downtrend could very well continue. MACD is continuing to remain below the 0 line, and the percent R just took a big drop down here, of course, as a result of Friday's action. So let's take a look at some other charts. Here's a chart with the CCI indicator, and interestingly enough, CCI remains above 0. When CCI is above 0, usually the trend is still up, you know. So that's encouraging for the bulls and for those of us who still own some stocks. So that's what I wanted to point out on this chart. It's very similar to the other one we just saw, of course. It's the same daily chart. Actually, same weekly chart that we saw earlier. And here's a chart, a daily chart of the S&P with the VIX, the volatility index for the NYSE. Now, what we should note here is that when VIX gets to these overbought levels, usually the market tends to reverse, to turn around. VIX, as you probably know, is inversely related to the prices of the S&P here. As VIX comes down, S&P is going up. Typically, some people look to buy the index as VIX is coming down, and that would have been a pretty good play here. We'll see if that happens here. Right now we're at 25.76. Previous closes were around 28 back in February. Okay, back in January and February. So we'll see how that develops. But market is, again, this is telling us market is oversold. The daily chart of the NASDAQ composite looks very, very similar, of course, to the S&P. But we can take a look. Right now we can see that we still have this, we had this Bollinger Band, and it looked as though once again it was breaking to the upside, but it did to the downside. Bollinger Band squeezes typically tell us that we can look for more momentum, either up or down after these squeezes. One here, one here. This one was down, this one was up, etc. You can go back and take a look at some of those. So let's take a look at something else now. Now, before we leave this group of charts, let me try to summarize a little bit. We saw on the monthly chart that the trend is still up, although we are closing closer to the bottom of the candle for this month. Now, on the weekly chart, we see that we're at a critical juncture here. We saw that the Kalman filter is still above the instantaneous trend line. However, there are indications that this thing could go lower. On the daily chart, there is no doubt the trend is down. Kalman filter is below the instantaneous trend line. And we wait to see now if, because the market is looking so oversold, because VIX is so high, is at 25 and a fraction, that perhaps we'll get a bounce next week. How big a bounce is all up for grabs. And let's take a look at some other things now. Here's one of those charts from Best Choice that shows us a regression channel. Obviously, this thing is very oversold. It's right all the way down here now, way below the 10% line. And usually when we get below the 10% line, we get a move back up. So there's a chance here that we could see a nice move back up in the next week or two. So I just want to show you this one. And let's take a look at the 6-month chart. On the 6-month chart, being a longer time frame, we can see that the S&P actually closed just below the 10% line. So everything is pointing to a very oversold condition here. We saw VIX very high, and now we're seeing that the regression channel prices have regressed a lot back down to this line here. So we'll take a look at some other things now before we end. And this is a chart, the weekly chart of the S&P from the stock charts. It shows the impulse bars, red, blue, and green. We see now that last week we have this red bar. So the weekly chart is showing us, for the first time in a long time, a red bar. Now, I've looked back here, and you could see that once the 9 is above the 30, the green line above the red line, 9 EMA above 30 weighted moving average, even if you get a red bar, it doesn't mean that you're going to go much lower necessarily, because we've had red bars here and continue to trend up. So we'll see if this holds in this case here, because we definitely have the green line above the red line, 9 above 30, right? Now let's take a look at the Elder Force Index. In an uptrend, according to Alex Elder, when you get this spike down, it's usually a good buy signal. When you get a spike way down below the zero line, it's usually a good buy signal. We'll see how that plays out. So again, we have oversold conditions, we have the spike down, and we have a red bar on the weekly chart. What about the daily chart? The daily chart, let's take a look at that. Of course, we'll have a red bar here too, even larger one with a lot of volume. So is this some sort of capitulation with so much volume? Maybe. And look at the spike on the daily chart, way down. So we'll see how this develops. This chart is very, very instructive, because first of all, on the weekly chart, we have that red bar for the first time in a while. And so, yeah, we can go lower here. But when it happens in an uptrend, doesn't necessarily mean we're going to go down that much. So let's see how that develops, okay? There's a little hope here. And this is the last chart we look at today. And it is the new high, new low index. So remember that back in February, when Alex saw this very low level below the 7,500, I think it was, okay, he sent me an email, he sent us an email saying that this could lead to a very nice uptrend, which it did. And right now, the new high, new low index is above the 200 on the 50-day average. So that's encouraging. Maybe this market will still have some way to run. And maybe once we get rid of some of the bricks that were thrown at us, we might see some movement again. Frankly, as far as I'm concerned, some of the stocks that I own, they haven't moved very much, down maybe 1 or 2% on Friday, but they haven't moved very much. So I'm holding in there. I'm holding the stocks I have. Have a great weekend, and we'll see if we can do this. Maybe not next week, because that's a holiday weekend and we'll be away, but the week after. Have a good 4th of July.